Welcome back to Stock Kong Invest and Analysis, where we look at the market and break down the opportunities.
Like and subscribe!
Palantir, why insider transactions slowed drastically before Q4 earnings. Rating upgrade. This article was written by Envision Research. Summary. Pause. Palantir Technologies is upgraded to buy as insider selling slows and Q4 catalysts emerge. The pace of insider selling has slowed drastically in the past month, and the change is too large to ignore. Despite upward EPS revisions, I still see good odds for a positive surprise in Q4 due to fundamental catalysts. AI-driven government contracts, notably a $448 million U.S. Navy award, position PLTR well for potential supercycle upside with defense budget increases. Call options are worth considering, given the approaching Q4 earnings on 2/2/2026, the pressured stock price lately, and also the relatively quiet implied volatility. I am Envision Research. I hold a master's in quant investment. I lead the investing group Envision Early Retirement, where we offer proven solutions to generate both high income and high growth with isolated risks. PLTR. Stock insider sales slowed substantially. I last analyzed Palantir Technologies, Wayne's IC PLTR, on December 3rd with an article titled Palantir Q3 Earnings Rule of 40 Score Accelerates. That article served as a review of its Q3 earnings report, ER, and rated the stock as a hold. Since then, there have been a few new catalysts evolving around this AI stock. The rest of this follow-up article will detail my thoughts on two of them, the latest insider transactions and also the upcoming ER for FQ4 scheduled on Feb 2, 2026. These changes have led me to see large odds for a positive surprise in the ER. Combined with the pressured stock prices since my last writing, I see a more obvious skewness in its return risk curve now, and thus upgrade my rating to buy. Let me start with the most recent insider trading activities disclosed for Palantir stock. As shown in the next chart, insiders kept selling their shares. In the past month, they have sold a total of more than $6.2 million worth of shares with a total of 15 transactions. No buying activities were disclosed. Latest sellers include director Stat Friedman and also Alexander Moore, who executed multiple sales in a price range of around $167 to $170. However, the intensity of their selling has drastically decreased. As shown in the second chart below, in the past 3 months, roughly between November 2025 and Jan 2026, insiders made a total of 167 sell transactions, amounting to a total of around $178.2 million. This means that insiders sold about $172 million worth of their shares in the 2 months or so between November 2025 and December 2025. As such, the amount that they sold in the past month, i.e. $6.2 million, is a tiny fraction of what they've sold in late 2025. PLTR stock Q4 earnings report, ER, scheduled on Feb 2nd. The muted selling activities from insiders make good sense to me, given the pressured stock prices and also the changes in its business fundamentals. I will detail the key fundamental catalysts in the next section. In this section, I will just present the projected financial impacts of these catalysts on its FQ4 earnings. As seen, Palantir is expected to demonstrate robust earnings performance again in the Q4 ER. As a background, it reported a third quarter 2025 adjusted EPS of $21, which exceeded analyst expectations of 15 cents by a wide margin. The fourth quarter ER is scheduled for release on February 2nd, 2026. Latest analyst projections point to a normalized EPS of approximately $23 on estimated revenues of $1.34 billion, translating into a sequential growth rate of about 10% and 13% respectively. The latest EPS revisions have been completely positive, with 21 upward adjustments and no downward ones. Despite these bullish revisions, I still see good reasons for the company to report positive surprises in the Q4 ER as detailed next. PLTR stock, Q4 likely to report continued AI momentum. A key reason behind my above assessment is the AI momentum in its government business, in particular with DoD, Department of Defense or Department of War. PLTR continued its momentum on this front, and the macroscopic environment has become more favorable than my last writing. For example, since my last writing, PLTR has received a 2-year $448 million U.S. Navy ShipOS award. The goal of the project is to accelerate the application of AI and autonomy technologies to submarine shipbuilding. This could open the door for PLTR to the overall shipbuilding, in my view, which is a highly complex and data-heavy process. Expanding the horizontal wider, DoD awards like this also reflect PLTR's close alignments with the Trump administration's priorities, such as revitalizing American industry and also building the dream military by drastically expanding the country's defense budget. Other analysts, such as the comments from a Citi analyst quoted below, went a step further and see a government supercycle forming for PLTR. Citi analyst Radke said estimates for the fiscal 2026 government growth is at 51% year-over-year, or roughly 800 basis points above consensus, and the potential for 70% or more. This is driven by our view of a ramping defense supercycle and possible tailwinds from lapping the 2025 government shutdown and international U.S. allies' modernization. Radke added, "We will be closely watching Golden Dome and other major defense initiative announcements as potential catalysts through the year, though these should be larger 2027 numbers impacts." Whether such a supercycle materializes or not, Palantir is certainly well-positioned to capitalize on the AI potential, both with government agencies and also commercial customers, due to its differentiating technologies and business models. Most AI solutions start from data analytics and build into a problem solution, in my experience. Palantir's approach is fundamentally different and also better as I see it. It starts from the end problem and builds the solution backwards to data. Also, the business model is highly scalable and shows little CapEx requirements for incremental sales. As an example, the first chart below illustrates the annual CapEx to revenue ratio for Palantir in recent years. The data shows a significant overall downward trend, indicating increasingly capital-efficient capital deployment relative to its earnings. The ratio started near a high of approximately 0.024 in late 2019 and has declined to only 0.004 at this point. Other risks and final thoughts. In terms of downside risks, Palantir entails significant valuation risks. Despite the share price pressure and also revised EPS figures since my last writing, the stock's PE ratios are still in the triple digits, with a non-GAAP PE ratio of around 267x as seen. Quite extreme either in relative or absolute terms. As a counter-argument to my above assessment of its capital-light business model, I've seen some analysts expressing their concerns on the OPEX, operating expenses. It is true that a business, especially for a software company like PLTR, could be choked by OPEX too if the business relies heavily on highly skilled employees. The company has indeed experienced such problems before, as reflected in the sharp drop of its operating margins in 2021. See the next chart below. The company could certainly experience the problem again as the fight for AI talents intensifies. However, note that the company's operating margin has improved in the past 2 to 3 years and currently hovers around a peak level in this period. Lastly, as an alternative idea for potential investors, call options on the stock are interesting in my view considering A, the approaching ER, B, the pressured stock price lately, and C, the relatively quiet implied volatility, IV, for PLTR in the option market. As shown in the final chart, the stock's current IV is about 63.1, which is only slightly above its 52-week average of 61.2 by around 3%. I believe such an IV understates the odds for the stock to report earnings surprises for reasons analyzed above, thus creating a cost-effective option for potential investors to express their bullish view. Investors new to options need to be cautious that what I just said about cost-effectiveness is measured in terms of the absolute dollar amount required to buy options versus the capital exposure required for direct share ownership. In percentage terms, options buyers can suffer a 100% total loss if the option expires worthlessly. All told, this PLTR re-examination is mostly promoted.
Hey viewers, like and subscribe to our channel. We'll keep bringing you more insightful stock analysis. It's going to be wild.